19. Coming up this hour, we'll catch up with Jim Bianco of Bianco Research in the no-landing camp, Norman Rule of CSIS as Israel vows to retaliate against Iran, and Rob Casey of Signum Global Advisors following last night's showdown between Vance and Waltz. We begin this hour with the recent rally firmly on hold as the world awaits Israel's next move. Investors keeping one eye on US labour market data ahead of payrolls on Friday. Jim Bianco of Bianco Research writing, "I'm still a no-lander," meaning I see the economy is okay, not even showing signs of a soft landing. I can debate whether we are seeing much cooling in this labour market. Jim joins us now for more. Jim, good morning and welcome to New York.
Thanks for having me.
Lisa went through the job openings. You look at what's happening with the quits rate. Quits rate's down. Look at what's happening with the hirings rate. Hirings rate's down. Why do you not see that as a sign of a slowdown in this labour market?
If you look at the bigger picture of the numbers, they are down from, say, July or June. But the bigger picture over the last several years, these are still numbers that are very constructive for the labor market right now. If you want to expand out from the JOLTS report to payrolls to the household survey, those numbers look pretty good. Now, the one number that is weak has been the rising unemployment rate. But the Fed likes to use the phrase increase in labor supply, which is a euphemism for migration. We're getting more people coming into the country. The population growth rate in the country right now, according to the CBO, is pushing a 30-year high because of migration. And a lot of those people coming into the country are unemployed. And that's what's getting picked up in the unemployment rate, which is why that number is rising. That's not necessarily a sign that people are losing jobs.
2-year at 360 doesn't scream no landing. 10-year at 376 doesn't scream no landing. What's your view on this bond market?
You know, I think that at 360 on the 2-year note, it is priced in pretty much the Fed cutting rates all the way to say 3 to 3 1/4. That's in. 2-year note shouldn't go anywhere else. Wall Street is really on this idea that we're going to see a curve steepening. I guess I am too. But at this point, that's a bearish trade because we're going to stay at 360. And the way you steepen the curve is the 10-year yield has to start to rise from here. I don't see the 2-year note going, say, under 3% unless you make the case the economy's really falling apart and the Fed is going to cut rates well beyond, say, 3%, down to around 2% or lower.
I love when people say I'm a no-lander, I'm a soft lander. It's sort of like saying I'm a flat earther, but there's sort of a question here about what that means. I mean, going forward, does that mean that there just is no recession, or does that mean that there actually is a reacceleration from here of growth and inflation? You
know, you brought up a really good point because I've criticized the soft landing camp, that it's this thing without a definition. So in a year, I'll define it and tell you I was correct. I think a no.
You do the same now.
Yeah. Well, I think a no-lander scenario is if you accept that potential GDP, what would the economy grow without it being stimulated or restrained is around 2.5%, 2 to 2.5%. I think that's the no-landing camp, is that we continue to grow at the 2 to 2.5% camp. Also, if you wanted to throw inflation in there, I am in the sticky inflation camp that the long-run inflation rate is probably closer to a 3 handle, if not a 3 handle, then down at 2.0%, where the Fed thinks it's going to be. So if you add in the two together with nominal GDP, 2.5% real growth, 3-ish% inflation, you're talking about 5.5% nominal GDP, and that's where, the no landing idea comes.
How much does being a no-lander sort of hinge on this idea that authorities are ready, willing, and able to come in and step in, whether it's rate cuts, whether it's the bazooka we just got from China, whether it's potential fiscal stimulus in the United States, despite the deficit that people care about but aren't necessarily pricing in?
Oh, I think that, the no-lander camp, if I defined it the way I do, it's all of those things give me worried that we don't need the Fed to aggressively cut rates. We don't need massive fiscal stimulus. And if we're going to get it, what we're going to do is we're going to produce more inflation, probably second half of 25. And that's really the biggest concern right now is, are we going to overstimulate? Because in the no landing camp, we're arguing we don't really need that kind of stimulation, but so it looks like we're going to get it anyway.
You said you're going to take the over of the Friday's payroll report of 150K. Do you just immediately have to then slash 60, 70,000 off of that because of the revisions we continuously see?
Yeah, that's usually what happens. I think 25 of the last 31 months, the payroll report beats Wall Street's estimate, and then the revisions come in. And it's almost to the point now where people have been more and more asking me, what's your guess on revisions as opposed to what's your guess on the payroll report? Revisions, I think, are getting overstated a little bit, that usually when they run in cycles, the revisions. Up until 22, the revisions were mostly upward, and since 22, they've been mostly downward. And so I don't see the revisions as being some kind of dark secret thing that tells us that the economy's in trouble. But yeah, I probably see that the revisions will pull back on the numbers that we saw in July and August. But the headline number, you know, like I said, most of the time it seems to be.
When we get the next payroll report, the following one, when you look at what happened in October, we're going to have Hurricane Helene's impact and also the strike workers at the ports. How difficult is it going to be to really extrapolate the labor data?
Oh, yeah, and don't forget the Boeing strike, too. And so I heard Mike McKee say this the other day, and there is a possibility of a negative payroll report coming up. The payroll survey week is the 13th. If these strikes keep going in disruptions into the 13th, and we find that, getting things back to normal after Hurricane Helene goes more than 2 weeks, we could see this start to impact jobs. Remember the way the jobs survey works. They have a company report. If the company doesn't have power or it's closed and it doesn't report, they put them down for 0 this month. They'll pick it up next month, revise it, and you could see a big dive in the numbers. Hurricane Harvey, we saw that last 2017 in September. We saw a negative payroll report off of that when it hit Houston.
Anna Wong of Bloomberg Economics, later this hour. Anna's put some numbers on this. If the strike lasts more than 2 weeks, we estimate the knock-on effects could lower October payrolls due the 1st of November by as many as 80,000 jobs. They think that's going to lead the Federal Reserve to cut interest rates again by 50 basis points. If those numbers actually materialise, where are you on the Fed's move, November 7th?
That's going to be a difficult one, because if we were to see that type of number, and that's just off of the port strike, we still got the Boeing strike, we've still got the hurricane, and maybe disruption from the Middle East coming as well with energy prices. It's going to muddy the water for the Fed. It's going to make it very, very difficult to try and discern what is the economy doing. Yeah, we know that there's this port strike. Yeah, we know it depressed jobs. But we also know it's temporary, that the port strike will eventually end and things will eventually return back to normal. It's going to be very difficult for them. I think Powell set up the case for 25 at a couple of days ago when he spoke, in that seems to be more of the prudent action, especially that it's 2 days after the election, and there's a reasonable chance we won't know the outcome of the election by November 7th as well.
Jim, it's good to see you here in New York too. Thank you, sir. Jim Bianco there of Bianco Research. Just touching on the Middle East there. More on that in just a moment. Brent crude this